And I have with me Andrew Tsaku, he's a trader at Kapital Care Trust, and he joins me on the line today for this conversation. Andrew, was saying that the market failed to continue that momentum from that we saw last week. You know, what's at play here?
Yeah, it's quite very much in tandem with usual market behavior. Throughout the last week, we saw the market inching upwards, and expectedly, one should have seen the moderation in today's positioning coming through. So basically, what we've seen is some sort of adjustment, from traders and investors' perspective. Quite a number of the stocks that have recorded the negatives on the board are basically the same ones that actually enjoyed a lot of patronage last week. So, given the fact that certainly there is some cherry picking going on as well as profit taking, the kind of experience you saw today is basically one of the things you should expect to happen in any market.
All right, we're seeing some first quarter earnings already trickle in. We understand that the Nigerian Stock Exchange, the authorities there, gave the companies a forbearance of 60 days to report their Q1 earnings, though. But what are your expectations for the earnings so far?
We do expect that the first quarter earnings will still be a kind of a mirror effect of what happened last year. We are also very conscious of the fact that the the germane issues around COVID-19 had some incursion in some part of the quarter. But our expectations are largely the fact that we are more likely to see the effect of COVID-19 in the second quarter reporting much more than the first, because we had gone a lot of mileage before the lockdown, for example, began in Nigeria. So expectations are quite fairly stable. We do not expect so much deviation. Yes, of course, the exchange, like you rightly pointed out, has given this window of latitude to companies that may not be able to comply with the deadline of reporting, given the unique circumstance we all have found ourselves. But that extension is not in any way to undermine the performance of the individual companies involved. It's just to say, well, we understand the pressure you might be going through, and we'll give you enough room to be able to provide the information that the market might require along the line.
All right, talking about individual companies there, we saw the earnings from Unilever. I'd like to know what you make out of the earnings that were released.
Unilever has, of course, been one of the major companies that has been trading in terms of even their normal operational base in very difficult waters. It hasn't been quite easy for the past couple of years. We'll continue to see their margins thinning out in the face of keen competition, and a lot of pressure also stemming from enabling environment within which they've had to thrive. So these numbers have continued to be challenged, and it's not unexpected. This is the kind of performance that continues to come out from Unilever.
All right, but looking at the top losers list from today, I'm looking at 3 banks there. We're seeing GT Bank, we're seeing Zenith Bank there, we're seeing UBN as well. Is it that the sentiment from the banks is waning out?
No, like I said from the beginning, if you take Zenith Bank as an example, less than a fortnight ago, the stock was trading below 11 naira. So in other words, within a space of 2 weeks or less, we've seen almost 5 naira change in the price of upward change in the price of Zenith. That's also typical with GT and a number of the tier 1 banks. So basically the point is, if the stock traded that low a few days or barely 2 weeks ago, you do not expect that it will continue to rise in a perpetual manner. So what you've seen today is basically a moderation in that rise. It traded close to 16 naira sometimes last week before this moderation began. So it's one of the things you quite often find in the marketplace. Don't forget, different investors come with different appetite. There are those who come to do day trading. There are those who have the very short end of the market. So once their objectives are achieved, they pass on the baton. And so in doing that, you continue to see some price modulation. It has nothing to do with expectations of the earnings. If anything, I do think that post-quarter reports is to be favorable.
All right, we're seeing an 8 naira improvement on Nestle here as well. And quite a lot of people have talked about the consumer goods space and how the impact of COVID-19 is going to be on that sector, though. What's your take?
Nestle was one of the stocks that suffered great diminution in value on account of COVID-19 and the like. It's attained, its 1 year low about a fortnight ago. So what you're beginning to see is some level of recovery. And don't forget that 8 naira might look like it's quite tangible, but that's still less than 1% change in the price of Nestle. For investors that are well acquainted with Nestle, yes, it's a bellwether stock, and it will continue to enjoy some latitude in the marketplace. Even the nature of the company and the products, offering from it. COVID-19, yes, will have some level of effect, but they are household products basically. And now that you're even sitting more at home, you're likely to have more need for household-oriented products. So they have an advantage in some sense because the kind of products they churn out to the market are things that are very desirable on a relatively daily basis. So we do hope that the diminution in its price, which was much more forceful based on the changes in the market space, will allow it some accuracy as the days unfold.